Welcome to our weekly market review brought to you by Treasury One and ETM Analytics. As per usual, I'm joined by currency strategist Andre Cilia. Andre, another Monday, another tariff, right? Trump came out swinging this past weekend. Actually, was it a steel plant saying that he's going to up tariffs on steel and aluminum from 25 to 50%. It's very interesting because the context around this, you must remember that the deal that he organized with the UK, I think earlier last month, said that there's going to be no tariffs on steel and aluminum. And this also comes as the Japan Nippon Steel Company, there's kind of a partnership going on. They will invest, I think, $14 billion in the US steel industry in the US. So, we're back at it. Here we go.
Yes, good morning. Now, the one thing that I've said is, wasn't elected for 2 or 3 months, he was elected for 4 years. Erratic personalities does not go away. A leopard doesn't change its spots. And it also, to me, seems a lot depends on, is that little golf ball on the fairway or in the rough? And who am I going to see? Because I'm speaking to an audience and I will please the audience. So this time around, it was in the rough, visiting a steel factory in Pennsylvania and addressing the workers and so forth, and playing to the audience. But I've also said more than once that he's imposed tariffs on Liberation Day and he suspended it or postponed it. Nothing, absolutely nothing is reaching finality. And it chop and changes all the time. So now he's going to take 25 to 50 on the steel. How does that change an agreement with the UK? How does that change an agreement of the suspension of tariffs with China in the meantime? So hence these two pictures. It starts with steel, but it brings everything into account. So all up in the air, and even a signed agreement makes it difficult. So it just creates volatility, it creates uncertainty, and the uncertainty is not reaching any finality. Yes. So we have to watch it, we have to see where this goes. He's now imposed these steel tariffs, and now we have to see what's the retaliation from other people and how does it influence other tariffs? It simply says one thing to us, and I can't say anything more than this. Brings volatility, brings uncertainty, and no finality.
Exactly. And there's, like you mentioned, this tit for tat now between the US and China. It seems at least that the diplomatic backdoors between the two countries remain open. So we know that talks are still ongoing, perhaps a bit strained after this weekend's comments between the two countries. But at least, they are still talking. But this just shows how extremely difficult it is to achieve what Trump, I suppose, is trying to achieve with all these arrangements and all these deals and all these talks, specifically between Beijing and Washington. It's not going to be as easy as just find a deal within 90 days for them to move forward on. So, like you said, definitely something to look out for, and this can, create a lot of volatility in markets. But sticking to the US, of course, we've been tracking the labor data now for the past couple of years to see, will there be weakness? Will there be some cracks in the labor market? Holding up pretty well, everything given. But perhaps slightly softer data expect to come out this week?
Okay, so yes. Uncertainty, and that's and no finality is words that I've used just before this now a lot. If I have to employ people, even if I have a vacancy, but I'm not sure where things are going, I don't employ. I wait for something more final to see how it develops. I don't expand my factory. I don't expand my business. I bring everything to a cool down period to see where it ends. So we can expect that jobs could slow, the new jobs could slow, employment can slow, which means unemployment will increase slightly, and that will place pressure on the Fed to look at their interest rate policy. That will also be people off from going out buying and spending their money, waiting to see where things go. So all of this could impact on the US economy. It could impact on the Federal Reserve. It could impact on how they look at interest rates and whether they cut interest rates. Let's remember 2 targets here for the Fed. 1, keep inflation low at the target. 2, keep unemployment low, keep jobs growing, in other words. So that could put the pressure on cuts of interest rates. And maybe that's exactly what Donald Trump wants. He's continuously speaking that he wants lower interest rates. A weaker dollar, because of that, will also benefit him because that makes his exports cheaper to other countries. So maybe this is where things are heading, a weaker dollar and lower interest rates, and then he would achieve what he wants. And that could turn things around a little bit again. But first of all, we have to see how it gels out. No certainty and no finality.
That's it. Looking at the domestic slate this week, a string of data coming out for South Africa, including, of course, our GDP figures. We're not expecting a rosy picture on that. The SARB is obviously releasing their quarterly bulletin. And we'll just give a picture of South Africa's economic performance. Again, not expecting anything rosy, but not anything too shocking that could set the rand off either, right?
On the rand, the benefit for the rand could lie in this uncertainty, which could place the dollar in a space where it weakens slightly, and that could keep the rand on the front foot. As for the figures to be released, we had the good news of an interest rate cut that could, in the next quarter, assist growth a little bit because the consumer might feel a little bit better. But for the figures that's going to be released, no lights is going to be shot out with those. We know that that the economy is under pressure. We know that there's no real growth. There's some other good news that things seems to be heading in the right direction in terms of being removed from a grey list as things develop and so forth. Right. So, all these things and a weaker dollar could benefit the rand. In the short term, we might see, because of the tariff uncertainty and those talks going on again, that it could spark a bit of a buy probability, people buying dollars, covering short positions and weakening slightly above the 18. We have seen that on Friday. But then, as I said, we've seen now a dollar weakening. So that put it back at a lower level. But there is some good news. An interest rate cut that we have seen could bring back some spark into the economy in terms of growth going forward, but the history is bad. So no lights to be shot out with any of the figures this week.
So smooth sailing, barring, of course, any escalation of trade tensions between the two giants or someone getting out of bed with the wrong foot in the White House. It seems to be like it's going to be a smooth week for South Africa this week. Other than that, Andre, thank you very much. We will chat again next week.